You need to prepare for retirement. You might need to save for your child's education. You might just want to grow capital to buy some other big expenditure, such as a house, a boat, or a vacation. Whether you're the kind of person who likes to manage his or her own finances, or who just wants to understand what your investment advisor is talking about, this audiobook is for you. I will explain, in easy-to-understand language, why you should be investing in ETFs over almost any other investment vehicle. I promise not to use any mathematical formulas. Investing and increasing your assets is difficult. It means having to choose from a multitude of choices and decide which will be a winner. It's taking a risk on the unknown, and then waiting. Basically, it's predicting the future, and that's hard to do well. Wall Street investment advisors tell you this is a very complex process, and thus, individual investors need their services to navigate these difficult waters. But it doesn't have to be that way. It can be very simple if you follow a systematic approach. One way to simplify your investing life is to buy ETFs. Let's face it. If you wanted to spend hours each day researching the price-earnings ratio and the return on investment of public companies, you would have gone for a career on Wall Street. Whether you do or don't work on Wall Street, I'm assuming that reading financial statements in your free time sounds like about as much fun as getting a foot amputated. Even if you like picking stocks, unforeseen circumstances burn the best stock pickers. You can be right in forecasting an industry's rise, but you could own the one company in that industry that was posting a loss or suffering from a scandal. By owning a fund, you could own the entire industry, making one company's troubles just a small stain on your profits. For this reason, mutual funds have flourished. Mutual fund investors know that funds are great investment vehicles. Buying mutual funds is much easier than buying individual stocks. You get a professional manager to do the hard work for you. Plus, they offer diversification with a low minimum investment. With more than 8,000 mutual funds on the market, you can buy a portfolio to suit any strategy. A single fund can hold as few as 20 underlying securities, or thousands. It's a wonderful concept. You don't have to pay attention to the financial news. You don't have to spend time doing scads of research on a wide range of stocks and industries. You just have to pick a few funds, then save the money to put into them. The fund manager takes care of all the rest. He researches stocks, decides what to own, and then buys and sells in order to maximize profits. You don't have to get your foot amputated. Consequently, mutual funds are the premier savings device for Americans. According to the Investment Company Institute, the mutual fund industry's trade group, 44% of all U.S. households own mutual funds or a similar investment device. For nearly 70 years, mutual funds have served the needs of individual investors. For the most part, individual investors have been served well, but not always. High fees are a huge offense mutual funds commit against their own shareholders. In investments, high fees can mean the difference between earning an annual profit or a loss. And the more fees decrease the size of your investment, the longer you will need to save. So, if you found an investment very similar to a mutual fund, for a much lower price, would you buy it? Of course you would. ETFs are that product. ETFs offer everything a mutual fund does, and usually cost less to own. With the flexibility to trade during the hours of the stock market and daily portfolio transparency, an alternate title for this audiobook could have been Mutual Funds Are Good. ETFs are just better. If you're one of those hedge fund investors who believe that you get what you pay for, then ETFs are not for you. Unregulated hedge funds offer the potential for huge profits for people who can make a minimum investment in the millions of dollars and stomach massive amounts of risk. With no transparency, the hedge fund investor has no idea what he owns, and it can often take weeks or months to get his money out. You need to be rich to invest in hedge funds because there is a much greater risk of their blowing up.